of the S&P 500, along with the regression channel with a half and a full standard deviation, green dotted green solid line, as well as the red dotted red solid line. And Justin, let's start with you. Things have been pretty calm lately. How does that sit with you?
Calm is good. One of the things that has been concerning for us a lot of times is if the market gets too overheated, it's going up too fast, we start getting extended from the moving averages. And right now, that's not happening. So, in terms of looking at the regression lines, we're just kind of hanging out there, right underneath the white line, which is the regression line. And then, of course, the dashed lines are your half standard deviations, and then the full standard deviations are those solid lines. So the fact that we're just not, getting overheated is good, and that's happening with the Nasdaq as well. Yesterday was an inside day to Friday. Friday was an inside day to Thursday, so both of them were inside. So that just lets things calm down a little bit, and it's not like there's stocks that aren't moving. I mean, there's a lot of movement that we're seeing in a lot of these growth names, some real power coming out, as well as David Ryan alluded to earlier, some of the cyclicals. In particular, the steel was looking very interesting. A lot of setups there. I mentioned in the stock market today video yesterday that Ed and Allie had kind of teed that up on Friday, just saying, look, this is setting up, and I think they did a great job kind of showing that on Friday, and lo and behold, Monday, I think there was a lot of actionable stuff in there. So despite the fact that there's calmness, you could say, in the indexes, I still think that there's a lot of interesting looking setups out there and things to do.
Amen to that. That was great analysis, Justin. A follow-on question, which we'll ask all of the panelists today. Justin, could you please share with your main portfolio, how much invested are you? Are you getting more aggressive?
Yeah. You know what? I have been. So you know what? I did some jostling around, but I'm probably 80, between 85 and 90% invested right now.
Excellent. And is it mixed between ETFs and stocks? Do you go with only one type of security?
I have just, oh, you know what? I got rid of that ETF. I forgot. So yeah, you know what? It's all stocks right now.
And Allie, how about you? What's your general feeling of the market? And are you also share, with your main trading account? Are you fully invested, getting closer there? How about some details?
Sure. I know everyone's dying to know what I'm doing in my portfolio.
Of course we are.
But no, I couldn't have said it better than Justin myself. It's great to see underneath the surface a lot of interesting action. I know yesterday when we were doing our industry group analysis over the weekend, there weren't a ton of setups, so I thought that was notable. So just something to keep in mind. But if we're still seeing our kinds of stocks performing well while we're not seeing the market get overheated, that is a great thing. I'm also interested to see how all of the stocks that were doing well early in the year, as David Ryan mentioned, how those bases are they going to be successful breakouts from those bases? So that'll be interesting to see. And then in terms of my exposure level, I think I'm about 75 to 80% right now. And I like stocks and ETFs. So sometimes I will go with an ETF if it is maybe more in my comfort level to do that versus picking a stock like XLF, for example, just getting a little exposure to financials, something like that. And then back from one of the S&P pullbacks a while ago, I was able to get a little UPRO. So I've been holding that for quite a while. And that has done well for me.
Great details there. David, could you please detail what sort of changes you've made to your portfolio over the past week, as well as your outlook?
Where I'm positioned is probably still around 50 to 60%. I'm not pushing it because the problem is that this rotation continues to happen, and as I mentioned, now you're going back to some of the cyclical stocks, some of the big cap that had been leading the big cap tech. I'm talking like the FANG type of stocks are now, they're not doing anything wrong, but they're, I mean, I guess Amazon missed, but they're just kind of drifting, and it seems like you have to just almost stay ahead of this rotation. And so what I keep on looking at as I continue to look at the strongest groups that might have been sitting out for the last 2 to 3 weeks to see if they start turning. And so that's why I had been buying almost 2 weeks ago, Nucor as it was starting to turn. And so you always just have to keep on looking at what have been the strongest groups, but have been quiet and no one's paying attention to them. Those are the ones you have to start looking at. And that's what I'm sort of constantly doing, is always looking for strongest groups that have sat out and that are starting to turn. But overall, there is so much money out there. I think it just keeps on supporting the market. Anytime there's a 2-day correction, that money just starts moving right on in, supporting the market, and moving it back up again.
Very good. Thank you very much, David. And before we go into
sometimes it feels like it's not leaving, it's just going somewhere else.
Yeah, it's just shifting. And then we've got an infrastructure bill, and then they're talking about another $3 trillion bill. I mean, where is all this money? I mean, they just keep on throwing it out here. So it seems to find its way into the market.
Good points all. And before we go to a Marcus Smith chart, just want to highlight the 2 ready and watch lists that are available only to subscribers. You can see over here, leading the upside, we have names such as CLF, one of the SurDog type of companies, VRTF, SPT, Carvana, CVNA, which we talked about. Above that, we have the similar names, but we will definitely look at Nucor right now, because this is one that is really come back, just like Arnold Schwarzenegger would like it to do, right? And David, also, after we talk about this one, just for the future, some people on the show would like to know a little more detail about how you handle some of the other non-commodity names, such as RVLV. I know you already talked about that.
Yeah, no, no, that's fine.
Yeah, we'll go back to that one. But let's start with Nucor, NUE, and tell us how you entered the stock.
Well, the stock had a great run, and then came down in June and got some good volume. But as you see, it came down again into early July. There really wasn't as much volume as there was on that first down. It's almost, and lots of times I see this. If you the stock first hit 92.72. That's the first leg down, and then the second leg down, it doesn't show it, but it looks like it hit 91 3/4, and then the third move down was 87.71. And lots of times, I've mentioned this before, you get moves in threes, 3 moves up into a high, 3 moves into a low. And on the third move down in 87, you didn't get very much volume at all. And then you broke that downtrend, and see how the volume really started picking back up. And you must have gotten 6 or 7 days in a row, maybe even more than that, moving back up. Now, that was an early entry because it broke that downtrend, and it broke it on some good volume. But here's your second entry, was here yesterday, where it pulled back for 2 days, and then it came on, and that's where I added to my position. Now you're back to the high. The risk is getting higher because you've come up from 87 to 110. What I would expect it to do, and it doesn't always do what you want it to do,